Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
Welcome back, John. What are you going to be talking about today?
Well, Jim, today I'm going to go through what is a Great Canadian Area play about. It's something I've been meditating on for 40 years, and we're going to go through and just list it and explain how it differs from just an ordinary area play.
John, nearly 3 decades ago, you defined a Great Canadian Area play on the basis of 7 key conditions. How did you come up with that criteria, and is a Great Canadian Area play still possible today?
Well, I have been pessimistic for a decade, in fact more than a decade, that a Great Canadian Area play is still possible in the modern environment, given the enormous size that the resource sector, the junior resource sector, has expanded into it. Now, I first became familiar with an area play in 1983 when I was hired by my broker to become a research assistant because they were suddenly so busy as a result of the Hemlo discovery that his assistant couldn't do all that filing work. And I ended up staying in the industry as a consequence. So Hemlo, although I did not catch the early parts of it, it basically started in 1981. It exploded in 1983, and I saw then the area play blow out around it, and for the next couple years, I watched it very closely as all these juniors hoped to establish that there were other 20 million ounce deposits in an area where everybody had said there weren't supposed to be any significant deposits, and it was a style that was different from the more typical orogenic vein deposits that make up the Distor Porcupine and the Cadillac Larder breaks, where over 80 to 100 million ounces have been mined. Then my next experience was the Golden Triangle area play that erupted in 1989, and this also came out of a bear market, just as did the Corona's discovery of Hemlo, and this was the SK Creek discovery that brought the market to life. It never did spread beyond the 40 or 50 companies that ended up staking most of the Golden Triangle, and this was a world-class discovery, and I watched the dynamics of that also. And then we ended up in another bear market, and this one was broken in late 1991 when Diamit announced that it had found diamonds at Ekati. And that one I saw from its very beginning and watched it unfold over the next 3-4 years, and really gave me an understanding of what created a Great Canadian Area play as opposed to just an ordinary area play around somebody's interesting discovery. Everybody stakes ground around it, but it never really hits the critical mass of achieving bubble and mania proportions. And I penned the description of it in early 1995. I think it was the second edition of my newly launched Kaiser bottom fishing report. I'd moved to the United States in 1994, issued my first one in the sort of last quarter of 1994. And ironically, I used these 7 conditions that I came up with to contrast something at the time called Lebel-sur-Quévillon, which today is in that same area as the Windfall deposit that Osisko Mining was developing, and I compared it negatively to Diamond Field's Boise's Bay discovery, which at the time had only benefited from the dike intersection, and the stock had rocketed to $12 or so, and Friedland had managed to stake a huge chunk of land before he put out the news that he had interesting results. And I made the case that Lebel-sur-Quévillon, which a little Quebec junior called Merger had discovered and trenched some really broad intervals of gold at surface, this would become a classic Great Canadian Area play. Well, in retrospect, when they drilled this target, it turned out it was a relatively narrow vein that was quite flat lying, so its true width was not very interesting at all. And that Great Canadian Area play didn't even become an area play. It just pretty much died. And the reasons that I had come up with for saying that Voisey's Bay would not become an area play, those ended up being blown away when the ovoid intersection was found, and suddenly the scale of the discovery went way, way up. And then the whole Labrador area ended up having been staked and became the basis for an enormous exploration rush to try and find another overlooked Voisey's Bay nickel copper deposit. And so that kind of reinforced all my reasoning for what makes a great Canadian area play. And we saw when Virginia Gold made its Eleanor discovery, I thought that might become a great Canadian area play, but it never hit the critical mass. It was just an area play. The closest to an area play was the Ring of Fire discovery by Noront in 2007. And this came in the midst of the China supercycle boom. Everybody had made an enormous amount of money. And there we thought it was the beginning of another Voisey's Bay discovery. And the Ring of Fire met many of the criteria for the Great Canadian area play, but it ultimately failed because the discovery proved not to meet one of the key conditions, which is substantial scale, world-class scale. And after that, when that fizzled, I've pretty much given up. But what I'm seeing now with the James Bay region and the lithium potential that it represents, this is shaping up to be a great Canadian area play in the context of a global rush for lithium pegmatite deposits to feed this 600% expansion in supply that has been projected to meet the goals for 2030 in terms of electric vehicle sales by that time.
Your first condition asks, does the discovery have an unexpectedly high value potential? Why does that matter?
You know, good discoveries happen. You find a 2-3 million ounce gold deposit. A junior will go from 10, 20 cents to, $5, $10 or so. But that's not really true scale. For world-class scale, it has to be worth billions of dollars. When somebody makes a significant discovery, there will be staking around that area. Often the discovery ends up being unfolding quite slowly. For example, I'm watching Endurance Gold, one of our favorites. It has the Reliance project. So far, it doesn't have the scale. It has the potential to be world-class scale, but they haven't done the deep drilling which would flesh out that scale. But they've been quietly expanding their land position in the area and have a district there. But even if they end up with sort of a 4 million ounce discovery, that probably won't create a great Canadian area play in that region. So what made Voisey's Bay so extraordinary at the time when it erupted was it ended up being taken out for $4 billion, which ironically ended up being worth 4 times more what they discounted cash flow valuation demonstrated that project to be, based on the maximum operating rate you could open pit mine the ovoid. The Caddy's Diamet Ekati discovery, that one we had no limit because the dream was, did this have another Zhuaneng in it, like Botswana Zhuaneng, which is probably the richest diamond pipe in the world. It was all brand new, and nobody had expected Canada to ever have any potential. And similarly with Voisey's Bay, other big companies had gone through Labrador and looked for exactly these types of magmatic segregation deposits and pretty much come empty. And in case of SK Creek, the claims that Stikine Silver and Calpine ended up developing, they were tiny claims that had been held for 60, 70 years in a region that had shown lots of exploration for high-grade gold, but nobody had ever seen such a rich VMS, gold-enriched silver and gold enriched base metal VMS deposit in that area. And of course, Hemlo, also 20 million ounces in one basic location, split amongst three different groups. There was Corona itself, then the Williams deposit that Lac kind of stole and had to ultimately give back. And then there was the Golden Scepter and Goliath gold portion. Three groups ended up all having pieces of this enormously huge deposit. So you need to see this unexpectedly high potential emerging to really get people dreaming, and the shock value too of seeing this come out from an area where there was previously presumed to be nothing. So it has to be an unexpected development. It can't be like they've been chasing for this type in this area and now they found another super high grade copper deposit in an area where there already are plenty known to exist.
Your second condition asks, is there an element of surprise that leaves open the possibility for more and even better discoveries? How does James Bay fit that?
Well, the James Bay region has been the focus of exploration for more than three decades. Andre Gaumond, through his first with Virginia Gold and then Virginia Mines, was obsessed with this part of central Quebec, which does not have any really interesting mines at all. Eleanor was the closest that came to a mine, but when it was developed, the NPV was less than the projected capex, and the IRR was pretty low. And it was ultimately developed because Goldcorp had paid $750 million for it and put a lot more money in to delineate it. And there was the speculation that the marginal economics would be bailed out by a rising real gold price, which of course didn't happen in the last decade. Gold sank back down to $1,300, where it wallowed for a while and helped contribute to this 10-year bear market that we had. But what's interesting about the James Bay region is that it's an aspect of it that has historically been ignored, namely these lithium pegmatites that have become the focus for a great Canadian area play. And there were deposits like the Wawuchi deposit that Nemaska tried to develop but ended up failing at because they didn't have the flow sheet right, and the lithium carbonate price had collapsed from $10, $12 a pound below $3 per pound, where even if the flow sheet worked, that probably wouldn't have been marginal. And there were a few like the CYR, the project that Lithium One had discovered, that Galaxy ended up taking over, and then Galaxy itself was taken over by Allchem, and Allchem is now pushing that towards production, through permitting, and there was farther south the Mobian, and then in not quite in the James Bay region there was the Canada Lithium project, which is now being redeveloped north of Val d'Or. But because lithium was such a small market, it was still in 2005, it was worth only $200 million. It was and dominated by the lithium triangle brine supply and by the Greenbushes pegmatite in Australia, which is like 250 million tons of 2.5% lithium oxide. One of the best deposits in the world. All these pegmatites were ignored because, if you put it into production successfully, you might tank the price because the market was so small. But this is what's so unusual about the James Bay as a candidate for a great Canadian area play, is that with these projections for future demand, the lithium market's going to be $100 to $200 billion a year. Now, the U.S. Geological Survey just published its 2022 supply estimates for all the different metals, and they show lithium metal supply increasing to 130,000 tons. They revised the 2021 figures from 100,000 to 107,000, and at the average lithium carbonate price of about $32 last year, that meant last year's supply was worth $49 billion. Now, this year's supply will probably be higher, but the value will not be as high because the $35 a pound price is due to an imbalance between demand and supply that was ultimately created by the fact that the Australians were too successful in mobilizing their pegmatite supply during the 2015-17 boom, which the EV rollout wasn't as quick as expected, so they crashed the price. But that has since reversed. Car companies are all now scrambling to secure their upstream lithium supply. Lithium is going to be part of whatever battery ends up being in electric vehicles in 2030. It's questionable what might be in 2035 and beyond. But for now, everybody needs more lithium. And what you're talking about maybe seeing in the next 3-4 years, supply ramping up to 400,000 tons, and the price will probably come down to $10-15 a pound for lithium carbonate. And that's a range where these pegmatites of 1% plus lithium oxide, they work. And the technology for processing them is understood. It's not complex like direct lithium extraction, which remains to be figured out. And of course, claystone, which also has a very complex flow sheet where people are truly going to believe it when we see it done, and it's going to take a couple years before we see that. But suddenly mapping out where 600,000 to 700,000 tons per year of lithium supply is supposed to come by for 2030 and beyond to make the electric vehicle expectations a reality. This is the huge game right now. And what we're seeing is that the James Bay area with the Corvette project, which Patriot Battery Metals is outlining, we're seeing there this is going to be a world-class supply of lithium. And we're also seeing that because the whole region really was explored for gold and base metals and not for lithium, even though there's very similar geological hosts for both of them, not exactly in the same place, but very close to each other. This is going to meet the other criteria, which is that this is not a singular company that owns it all. So the James Bay is meeting these criteria in a very big way.
Your third condition asks, is it probable the Discovery Junior didn't get it all? How can one tell?
Well, this is the beauty of the James Bay area play that's evolving, because all this past exploration work by companies like East Main and Virginia and some others, DOs, companies that have been there serious, that have been there a long time, it did a lot of geological work, the types of deposits that they followed, Azimuth, Midland are also have been busy in this area. It has generated a lot of information about the geology. And the Corvette property, which tracks about 30-40 kilometers of a mafic metavolcanic trend, which hosts multiple pegmatite occurrences. This was actually generated by Virginia Mines. It ended up being acquired by Osisko Gold Royalties for the the royalty that it had in the Eleanor mine, and they auctioned it. Osisko auctioned it to a little company called 92 Resources Corp in 2015, and it was keen on Lithium Mania 1.0, which everybody's talking about. Electric vehicles going to boost demand, and but the company never really got around to drilling much. And by 2018, when Midland had developed a mithril copper play next door, they did manage to raise some money and drill some targets, but they drilled it turned out what they drilled the gold target, and it didn't deliver particularly interesting results, and they ignored the lithium pegmatite, because by then lithium was down to $3 a pound, and it didn't matter if you had 50 million tons of 2%, because it wasn't going to work below $3 a pound. But now with $30 a pound and it working super well at $10 per pound and a footprint already of 50 million tons, and with the latest developments suggesting that when they extend this another 2 kilometers under the lake, they have a 100 million ton footprint. That's like a super world-class discovery. But they don't cover all that similar geology, and the fact that the geology will only have been focused on the immediate trends that had orogenic gold, but not beyond it, and may even have been mismapped beyond it, that leaves lots of room for parallel discoveries, as well as discoveries along trend, and also within other similar trends everywhere within the James Bay region. So in this case, they never claimed that they got it all. When Diamond Fields discovered Voisey's Bay, they had time to look at the host rock, and they staked every known mapped occurrence of the Tassayuak gneiss, which was the host for it. So what everybody else ended up staking was more the anorthosites, sites where you really had to be lucky to find anything overlooked, and it was kind of a hard sell that they to argue that, well, Friedland didn't get it all. In the case of the Diameti Caddy discover, Chuck Fickby did say, yeah, we got it all. We tracked these indicator minerals. We found where they all center into this cluster of kimberlites. But what he wasn't thinking about was the scale of this idea that the whole Slave Craton could be, which is the size of Switzerland, could be prospective for other clusters of kimberlites. So, and of course, just because he found a small cluster in one area didn't mean there would be strays around it. And the Diavik pipes, which are on the edges outside the original Ikati block, that sort of proved that, well, he did not get it all. But other clusters like Gaucho Quay were discovered quite far removed. And this was done by juniors realizing that where these things come up, the surface geology has nothing to do with it. They just punch through. So who knows where else this can be. James Bay is not quite that. There's big chunks of land where the geology is such that there's no potential whatsoever. So geology is going to matter in the James Bay area, but because of the origin of how Patriot ended up with this Corvette project and finally got around to taking it seriously in 2021 when lithium carbonate prices started to rise, this potential exists over a very large area, and it's the inspiration of this major world-class scale discovery that will be driving the James Bay Great Canadian Area play.
Your fourth condition asks, are there lots of different players with strategic land positions? Why does that matter?
Sometimes it ends up that a world-class discovery is made, and the company expands its land position to what it thinks is prospective for it, and then a few others manage to get wind of it and quickly surround it, and so you have the flagship discovery company and maybe a handful of others, and the flagship company rapidly gets highly valued. The other ones puff up in value on the potential while the glass is still half full, but it then doesn't attract capital. You really need to see many different parties with the ability to repeat the discovery, perhaps even exceed the scale of the discovery. I mean, who's to say that what the Patriot Battery has within its trend, Corvette trend, is the biggest and best in this region? Some of these stick out of the ground. It's supposed to be ridges because pegmatite is a hard material, and yet we're seeing the richest parts disappear under the lake, and it's recessively weathered. How's that supposed to be? That means it's not just where these pegmatites are sticking out of the ground. It could be, if it's in the right geology, it could be hidden by some other strange coincidence that resulted in the rock being gouged out and it being obscured by overburden or lakes. And so long as it's all quite shallow and the lakes are not significant lakes for the whole water concerns, these can be open pit mined and developed. So when you have many different players with potentially strategic land positions, the money comes in and it can keep coming in because it goes, of course, to the obvious ones first. But then when those ones are at sort of their valuation limit for what they've accomplished, then the market starts looking, okay, who else has something similar, and it expands. And so even if you're late to the game, you can still end up making money. So that's why having lots of different players that aren't related to each other with strategic land positions is an important condition to make it go beyond just being an area play, but being a great Canadian area play.
Your fifth condition asks, is it a rags to riches story? Why does that matter?
When, Fittke and Stu Blusson, they toiled for years with that company Diamet, often looking in the wrong place for diamonds in terms of classical theory as to where the diamond stability field exists and where kimberlites or if they erupted would have picked up some diamonds. But they ended up through persistence tracking down this Point Lake area that was their first pipe, and then figuring out everything around it. And with the help of BHP as a partner, they ended up demonstrating that here's a world-class cluster of diamondiferous kimberlites, and that made Chuck Fittke and Stu Blusson very wealthy, as well as the shareholders of Diamet, which was sort of a 50-60 cent stock. But within a year and a half, it had peaked at $60, which ended up being a valuation of about $2 billion implied. The market cap was only 29% of that because that was what Diamet net at the end of the day. But that was the value that 4 or 5 years later, when it was in production, BHP basically paid the equivalent of to buy out Diamet and its 29% share. So it's the idea of these sort of toiling geologists suddenly striking it rich and making a monster discovery. That really inspires the market. And of course, all these other little juniors, some of them fly by night, some of them other toiling geologists. Typically, the toiling geologist ones are the first to notice that this is something special that's happening, because a world-class discovery doesn't always happen right away. It sort of evolves in stages. So they move in first and grab the obviously the better land, and then all the ambulance chasers. In the case of the James Bay, we're seeing the refugees from the cannabis promotion sector. They're now getting into these shells, which are picking up land in the area, and investors sort of say any of these little companies out there could replicate the success. Now, this is where when Diamond Fields discovered Voisey's Bay, that didn't really fit that model, because Diamond Fields was a high-powered Robert Friedland play, loaded up with these various diamond prospects. It was, in fact, failing. And the irony of the Diamond Fields Voisey's Bay success was that the prospectors who were responsible for generating this play of looking in the Nain province of the eastern coast of Labrador, they were supposed to be looking for kimberlites. And the area is prospective because it used to be attached to Greenland, where we know there are also diamondiferous kimberlites, just none that have been shown to be world-class. And it was them, in the course of prospecting, taking samples from this rusty knob that others, a member of the Newfoundland Geological Survey, had taken a sample, but managed to take a sample from a part that was barren. They managed to get a sample from a portion that ran good grades, and they ended up saying, well, we should keep this, we should drill it. And Friedland himself didn't really want to, because it appeared to be a diamond bust, but the accountants prevailed and said, let's do this, let's keep this thing alive. And lo and behold, suddenly there was a world-class nickel-copper magnetic segregation style discovery in this area. But Friedland was already wealthy and successful, and the players that were plugged into Diamond Fields, there was institutional groups and high net worth individuals, so they got wealthier as a result, and it wasn't that inspiring to everybody else who flocked around it, and ultimately nobody else did find anything meaningful in that entire area. So the rags to riches aspect helps pull in people or investors, because it helps them think that the other ones that are still rags could end up also ending up rich as a result of exploration work. And this is the beauty of the S-curve nature of discovery exploration. When you start to see even small evidence of a significant discovery, once you have a great Canadian area play going, the market pushes the glass from half full to 90% full, and you get capital rushing in, and it becomes almost a momentum-driven play until eventually the play matures and whatever is to be found has been found, and it just becomes a development-type play that goes into production with the best ones selected for future development.
John, your sixth condition asks, is there sharing of information among the insiders of both the Discovery Junior and the satellites, and why is that important?
Well, normally when a company makes a discovery, and it has to figure out what's going on, and to meet the condition of this is something new and different for this area. There's a lot of uncertainty about, well, what makes this tick? What are the key criteria for this to be repeated elsewhere? And if the company has tied up a lot of the land that it thinks is important, it won't worry about keeping everything secret. It'll end up sharing. Here's what makes this tick. If they do not think they got it all, then there will be less sharing. But what happens with everybody else with the surrounding land around the main discovery is they're all eager to learn from each other. And for example, in March 1993, when PDAC was happening, Pat Sheehan organized a diamond short course, where she brought in all these diamond experts and all these geologists. Everybody converged on this course because they knew nothing about diamonds. And right now, hardly anybody knows anything about lithium pegmatites because there was no economic reason to know anything about it other than, ooh, that's a pegmatite, stay away. It has no commercial potential. So the James Bay area play with its lithium pegmatite potential is going to involve a lot of this sharing between groups. They're not yet eager to share at the moment because everybody's still scrambling to get good ground, and there's a lot of skepticism about what is in the running, what is not in the running. It's different from the slave craton, where the entire slave was now known to be prospective for diamonds, and there could be clusters anywhere. In the James Bay region, the trends that have the lithium-enriched pegmatites, they're not going to be everywhere, and they're not all going to be properly mapped. So for a moment, there is a lot of secrecy about who has what, but there is sharing going on about, well, once you have your property, what do you do to find it? And what's different about the James Bay situation, say the diamond situation, you say, well, what if you have another Shuaneng? Are you going to flood the market with diamonds? Because diamonds back then were only worth $8 billion a year. Today, they're still only worth $14 billion. 35 years or so later, the rough diamond market has barely grown. But here we're dealing with something unprecedented in the history, the necessary growth in supply of a metal from near obscurity, like sort of like almost 100-fold expansion, a $200 million market becoming a $100 to $200 billion dollar market. Not because it's fashionable like diamonds are, but because it's a small but necessary input to a policy mandate, which is to mitigate the effects of global warming by achieving net zero emissions by 2050. And this is sort of a big picture necessity. It's going to be forcing the governments to streamline their permitting, because if they don't do that and speed up the way in which the problems get recognized and dealt with, they can kiss all their policy goals goodbye about preventing climate change from exceeding that 1.5% increase goal by 2050. So this makes this one very interesting. Somebody asked me the other day, well, is Patriot going to have so much lithium that they're going to take care of all the missing needs? No. If I did some numbers calculating at what would be sort of say a 10,000 ton per day open pit operation with a sort of a 50 million ton deposit of running 2% lithium oxide. And by 2030, if this is in production, that would represent 3% of what's required by then to meet the electric vehicle lithium-ion battery requirements. So we need many of them. So there is not this concern we had with the rare earth mania of 2009 to 2012, where if you found too many rare earth deposits that were in the money, you were going to tank the price of it because supply would overwhelm demand. But here we're dealing with a massive supply shortfall, so we actually need multiple CV5 type discoveries in the James Bay region, and we would like to see it in the James Bay region because then the government will go all out to push the road infrastructure, the transportation infrastructure into these areas, not sit there and do endless discoveries about what tiny little fish might be impacted in the long run. No, we need to see the scale replicated. So I think the conditions are, once everybody knows who has what has been figured out, I think we're going to see a lot of sharing of information in order to accelerate the James Bay district to become a world-class district for future lithium supply.
John, your final condition asks, is the market's valuation of the Discovery Junior such that confirmation of the best case scenario still leaves substantial upside?
Yes, this was something that I was ultimately sort of confirmed in when Aurelian made the Fruta del Norte discovery in Ecuador, major gold discovery with a long shot hole after they'd blown through $19 million of a $20 million capital raise that they had done, and they scored a fantastic intersection. There was skepticism at the time that this was a down structure intersection, that as soon as you stepped away from it, you would get nothing. But additional holes were drilled to scissor it, and within 6 weeks, when the news came out, the stock really started taking off, going from $4 higher. And within 3 months, this stock hit $40, which it ended up reaching peak valuation right away, and that was too quick. There was no time for anybody to be skeptical about it for long, for people to make decisions to enter it and make money along the way. And we look at, say, Patriot Battery right now. So it has a $2 billion valuation, which has emerged over the past year as they've drilled over 100 holes into the CV5 pegmatite. And the scale of this is such that big companies are going to be looking at this. You could do an NPV, and this might end up being worth $10-20 billion down the road. Now, it's still going to take several years for this to be fully delineated and the network done and everything figured out as to so that a production decision can be made. But there is still room for this to double, say, be a $4 billion buyout target. And the question is, are the big boys going to come in and start bidding for this now before it gets too expensive? And we have the example of Sigma Lithium in Brazil, which achieved a $4 billion valuation last year when it got close to, I think it actually hit $50, and it was only a few bucks a couple of years ago during the abyss when lithium carbonate was below $3. So that one's kind of like stalled. It can't go significantly higher because they figured out what the throughput rate will be. It's going into production, so it will trade sideways. But if something like a Corvette project, you start saying there's maybe 2 or 3 CV5 deposits in there, these could be developed along trend as independent operations, perhaps feeding a giant central facility. So there's still upside for that particular company that's open-ended. And this keeps money going into the main flagship discovery play, and it allows that to keep going up. And when that keeps inching higher until it disappears in a takeover flurry, that pulls money into all the satellite juniors, all the area players. If it's valued at top value too quickly, that stops the inflow of money, and it just becomes a question, okay, this is now dead money. How do we get out of it? So having it not yet be fully valued, that is key to sustaining a great Canadian area play.
John, thank you so much for the update.
Jim, it's been a pleasure to review the 7 conditions for a great Canadian area play. After, a decade of thinking it just can't happen anymore, and now seeing it unfold before my eyes in the James Bay region. And, it's fascinating because the lithium plays are interesting everywhere else too. And who knows, when they start looking hard, that places in Saskatchewan and Manitoba and Ontario and in Northwest Territories won't also, and even in Atlantic Canada, won't deliver similar large bodies of 1% plus, because that's sort of the magic number. You want to be around 1%, you want to have a large open pitable deposit, and the future demand is going to have to be fed from many, many deposits, because these are not like porphyry deposits where you have a big, giant, huge deposit where you do 120,000 ton per day open pit mine, such as, say, FPX Nickel is proposing for its Dakar project, which is a huge, large-scale play. These bodies tend to be of a linear nature, and so you have constraints on how big a single open pit operation can be for these deposits. So I think we're entering a very exciting period, not just for the Great Canadian Area play in the James Bay region of Quebec, but also in the rest of Canada, where there is potential to demonstrate that these known lithium-bearing pegmatites actually have the scale and grade to also be development candidates.
We've been speaking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.